Good afternoon, real estate professionals. I hope everyone is doing well today. My name is Kurt Klaus. Welcome and thank you for joining us. This is the April edition of our monthly Agent Advantage live webinar series, titled today, How to Increase Your Selling Power with Renovation Loans. Again, thank you. We appreciate your time. We're glad you're here. These Agent Advantage webinars, if you're new to them, are all about giving you, the real estate community nationally, an edge in today's fiercely competitive market. We're all aware of the low supply of homes right now. I saw an article last month that we currently have more realtors than we do active listings. So crazy. There's just over 1 million homes for sale in February, and a slight tick up on number of agents, almost 1.5 million. So super competitive, lots of people looking to move up to bigger homes or maybe had to add a home office, and those looking for the perfect home in this competitive market. It's a challenge, and we think this topic relevant. Adding renovation loan options allows those looking for, the perfect home, and with such low inventory, and let them find an existing home and be able to make it their dream home with a loan that has built-in fixer-upper funds. So again, glad you're here. We're going to be covering both sides of the renovation loan process. We have 2 guest speakers today. We'll bring in Krista Pape on the lending side and Corey Burke, who is an agent, and they'll give us a good 1-2 punch. And we try to keep these webinars at about an hour. And our goal today is to give you a better understanding of products and the process, and to help up your selling power, give your buyers more options, educate you on all things around renovation. So we do these monthly webinars live because we want your questions. So please ask your questions at any time during the webinar. I promise we will answer questions at the end. We have time blocked in. So if you have a question for either one of our guest speakers, please type that in the chat and we will get to your questions at the end. If you are unfamiliar with Agent Advantage, the Agent Advantage website, these webinars are brought to you by the Agent Advantage website. This is brought to you by the Guaranteed Rate Companies. It is our no-cost platform website for agents across the country. It can be found at agents.rate.com. We also have an option of Agent Advantage for our Guaranteed Rate Affinity Company, agents.grarate.com. Also our proper rate, and that is agents.properrate.com. And the whole idea behind Agent Advantage is to have everything that we do with all the companies, all of the technology and the tools and the coaching. We value our relationship with real estate agents. We're realtor centric, and this website is a combination of everything we do to help you, the agent, to help your clients, to help you grow your business, look good to your clients, and kind of make your life easier. So everything is brought to you by the Agent Advantage website. Go check it out if you don't already have a account. Before we jump in and we want to get rolling, we want to do a quick survey. If Danielle will put that up, just to get a quick pulse of agents on our call. So take 2 seconds and answer this one simple question. Danielle will come on and give us our answers. We like to know as much as we can about our attendees and our agent audience. And both speakers will kind of get a pulse as to who they are talking to during the presentation.
All right, we got about 65% voted.
Pretty good. And again, before Danielle gives the results, please type your questions in that chat box in the go-to, and we will man that question queue and get to those questions at the end of the webinar. Results, Danielle, drum roll.
There we go, 23% yes and 77% no.
So we have a quarter of agents that have done at least one renovation loan ever. So good to know. And like I said, we'll have two guest speakers. I want to introduce our first speaker, Chris DePape. She has been in the mortgage industry for 25 years. I've known Chris since she came to Guaranteed Rate about 10 years ago, the same time I did. Upon her arrival here, she rolled out our FHA 203K and Fannie Mae Homestyle renovation programs. Chris presents across the country, shares her expert knowledge of renovation lending and how real estate agents can leverage these programs to close more transactions with your buyers and sellers. Chris is one of the top FHA volume originators in the country. She has done over 400 million in loans and renovation loans, licensed in 43 states. President's Club originator here at Guaranteed Rate and top renovation producer. And she currently manages our Midwest Renovation Loan Division. I want to thank you so much for joining us and helping us with the webinar, Chris. How are you?
Great, thanks, Kurt. How are you doing today?
I am doing well. Chris has a presentation queued up, and again, we'll field questions at the end for Chris. But yeah, thank you so much for being here, Chris. And we've done these in the past, and happy to have you share your insight and expertise with all of our agents on the call. Well, maybe I'll bring on our second guest speaker first, since it's audio only, and we can work on getting that PowerPoint presentation up for Chris. So why don't I introduce and bring in our agent. We'll just flip the order, Chris and Corey, instead of have you go first, we'll have Corey go first. But Corey is with Team Price Realty in Austin, Texas. And Corey she has 15 years experience in the real estate biz, and had a chat with Corey this week. I like Corey and we're grateful that she's with us, not because she is a successful renovation agent providing her clients knowledge about renovation loans, but she is really passionate about helping buyers experience homeownership, and really is all about how this can be a life-changing, financially for people. So Corey, if you're there, thank you so much for joining us. I know we're audio only as we work on the view of the PowerPoint for Chris, but thanks for joining us and sharing your insight. How are you doing?
I'm doing great. How are you?
I'm doing good. Thanks for saving us. So we want to have Corey talk about the real estate agent perspective as far as renovations. And to start out, I guess you can tell us a little something about yourself, but I would want to know, first question is how you got started with the renovation loan when you became an agent, and how you learned the process.
Yeah, absolutely. So what's cool is I actually know the process both as a buyer and as a realtor. How I got started in real estate in general was back in 2012, I was interested in buying my first house. I was a new agent. And I found a house that I loved the neighborhood. I loved the price of the house. And I found a sign in the front yard that said FHA 203K loan, and I just Googled it to see what it meant. It took me a little bit before I found Guaranteed Rate and a good lender for it. But what I was able to do at that time in my life, I was making like 45K a year at a desk job. I really wanted to be near downtown, but I couldn't afford like a really nice house near downtown. And I was able to buy this house that a lot of contractors actually told me was a tear down. It was completely unlivable. I don't think it even had its electric meter on it. But I was able to get it for $91,000. And through the FHA 203K loan, I was able to put about $60,000 into it and make it livable. And what was really cool is you really can do every single thing that you want as long as it fits within your budget and your approval amount. So I vaulted ceilings, I put in new flooring, I put in an HVAC system because there wasn't one. I put in all new appliances, cabinets. I actually changed, there had been one bathroom with this weird little room next to it, and I knocked all that out and made it a Jack and Jill with 2 bathroom areas and then a shared shower bathtub area that connected to 2 bedrooms. So I was able to do so much new siding, new windows, new paint, gas lines, every single thing I needed to do to make that house livable. And just that one experience completely changed my life. It changed my personal wealth. So it's why I'm so passionate about it, because a year and a half later, the house had gone up so much in value because I'd done all this work to it that I was able to do a cash out refinance. And then I bought 2 more duplexes with it, one with a friend and then another one on my own where I used another one of these loans. And it just kept going from there. And then the more remodels I did, then people started asking me to be their realtor because they were seeing me do all of this on really a pretty limited income at the time. And it completely changed my personal wealth. I have a real estate portfolio now because of it. And I had to borrow that first down payment of like $4,000, $5,000 from my mom on that very first house. So
what a story. So after doing this firsthand, and it sounds like doing it and learning from experience. So any other, specifics and what helped is, maybe looking back at advice or mistakes you learned from, or any sources of education tips that you would give an agent, one of those 70% of the agents on this call that have never done one, to get started, and how, what tips would you have for them to dive into this?
And as a realtor, the biggest thing is to learn the loan programs. The difference between, there's an FHA 203K, there's 2 different ones. There's the one that's under 35,000 and the one that's over 35,000. I think one is called Streamlined.
Yeah, Chris will be talking about everything on
Yeah.
the
Yeah.
loan side. Yeah, I know you guys, but
And
as
then
far
the
as
difference between the FHA 203K versus the home style loan. When I first started, the home style loan wasn't really around, but now that's the one that more of my clients are using because it has a few benefits, like where you can get 50% of the material cost up front. The draw process is easier than the FHA 203K. There's a few different things that now my clients are more going towards the home style. But the biggest thing is to learn these loans, because not only have I found that not a lot of agents know the loans, not a lot of lenders know the loans. So it's a really cool product to have in your back pocket, because if you know these loans and you know how they work, you can take, like right now I have, in Austin, our market is going crazy and our median home price is 510. I have clients who were looking up to 400, which is super competitive, and they wanted to be close to downtown. So they're competing with huge investors, and they're really not able to find one of those houses that's turnkey, move-in ready, and just exactly how they want it, because the prices for those houses have just gone through the roof. So we were able to run our contract now with the home style loan because we found a house that needed a lot of work, and we were actually able to get it in their budget, and it's only like within 5-10 minute drive from downtown Austin. So it's really cool.
All right, nice.
So it really expands the what you can do with your clients and getting them under contracts on less desirable houses.
Yeah, that's what I was going to ask, like what you're looking for with either a particular buyer or even a particular home that would, things to look for to bring this up to your buyers.
Yeah, I mean, sometimes the house is completely livable, but it's so dated that no one wants it. It's like no one wants the gold fixtures or old linoleum flooring or popcorn ceilings or all of those things. And so sometimes a house might be just less desirable because it's dated, not because it's not functional, which makes this loan product really great because you can do as little or as much as you want to a property. You can even add additional units if you're in the right zoning and you have the right lot for the property. You can add another unit to the property if it works with your specific financial and the zoning issues.
So your tip to someone that's new is to really dive in and learn and become an expert at the specific products that we're going to
yeah,
Chris can talk later.
most agents don't know it. So when you know it, it's just like, it's a huge benefit. And then people will be attracted to that. And it's like, one of my clients right now, a couple years ago, we used the home style loan. She got the house for 320, if I remember right, and her full loan was 400. We're now selling that property this year at 825,000. So, and now that client is buying another house that's in the 700s. So it's like that one client, I mean, that's 3 commissions for me, which is very nice. But my own client, her personal wealth went up so much in a matter
Talk
of 2
about life changing.
Yeah. So it's like when, and as a realtor, it's all I have to do is my client, she posted photos and she gave me some photos. I stuck them on my Facebook, showed her remodel change. And then people were asking me, oh, I want to do that too. And everyone loves the flip it and fix it and flip it shows in HDTV. So it's like you're actually giving people a product that lets them do that without all of the cash that investors have, because you can put down as low as only 3%, and it's 3% on the purchase price plus the repairs. So I mean, that's really low cash out of pocket. Another thing I often do is I ask for closing costs. I believe you can get up to 2% in closing costs of the sale price back.
Kurt, we can jump in and start the loan program
Okay.
info to cover that if you'd like, because we're ready to go over here.
Let's do that. And I promise everyone on the call, we will record this and put these slides in appropriately. So we'll have a package thing, but for today, we'll see if Chris can show the slides, but otherwise, stay tuned to the audio.
So great. Yep, let's go. So we have 2 programs here at Guaranteed Rate. The Fannie Mae Homestyle Renovation Program, which is our conventional program. We also have our FHA 203K program, which is, they are broken out into 2 different categories, a limited and a standard. There's just a couple differences, and then the limited is for more cosmetic and low, repair costs under $35,000. And again, we can detail that more if agents have specific questions. This is more like a Cliff Note version of, the renovation, just to get an introduction to the agents on how to use it. Right now we're battling, historically low inventory and high demand, with the buyers. So there may be less options. You might have to buy a home that's outdated or an estate sale, and this gives you the opportunity to use our money with 1 down payment. It's a 1 close, it's renovation plus purchase price. So you would take the renovation cost plus the purchase price, and then that's how we derive the down payment. The down payment options are 3%, 3.5%, and then they go up, to 5% or whatever a client would like to do. So we'll fit that to the client's profile of their debt to income and, their profile of down payment, property type. That's what, Guaranteed Rate will do as their loan officer, renovation specialist will get into, vetting the clients and making sure they're pre-approved. So hopefully for the agents, if you have hard to sell properties that maybe don't look that great, or our estate sales maybe have had damage, there's been a lot of storms, not only in Texas, as we all know, but, throughout the country, there's been some properties that are damaged that, may need repairs that we can help with if people are selling them. We've done properties that have had, fire damage, water damage, roof damage that has actually damaged the whole home. One thing that agents don't often know is that any property in any condition can be purchased with renovation. If it's listed as cash only, that means the listing agent may not know about this program and would need to be educated that, hey, we can buy it as is, it's fine. And with the financed offer, you're opening up to a way bigger pool of buyers and can often get your sellers more money. So if you're an agent going into a property that seems, dilapidated, this is a great program to know about, to explain, hey, cash buyer, you may not get as much money for this because they're going to pay a lot less because there's a smaller pool of cash buyers. But if we can list this properly with the renovation program, it can increase the money your seller gets and hopefully, turn around the house quickly to get it sold. So, be able to think creatively when you don't have a lot of inventory, and if you're listing, to help the buyers understand that they can use this program and not to just maybe walk in and out of your house. So hopefully we'll increase the market share of the agents on the phone, and just educating the agents that, you know, one example I'd like to give is we had a agent who attended the webinar, and then her dear friend called for many years, and they have 3 siblings. Well, their parents passed away, and it was an estate sale, had not been updated in, I think, 30 years. Well, the siblings all brought in an agent to interview, and, you know, they're like, oh, you know, it needs a lot of work, it's going to be hard to sell, and, you know, kind of a negative connotation, which, you know, that's not what really, you know, the siblings wanted to hear, you know, after just losing their parents. So the final agent came in who attended our webinar and brought some before and after photos, talked about the program, educated them all about how quickly they could sell it, listed it at a better price point, and just really educate them. Well, that agent won the listing, and it was a good listing, you know, $400,000. So, you know, the agent won the deal, sold the home in about 2 months, and, you know, the whole family was super happy. So just maybe bringing that into your, you know, portfolio of when you go and you are trying to win a listing, or if you have a buyer who maybe needs a certain school district or needs to live close to their parents, having this knowledge can convert, you know, into sales, which is increased market share.
And sorry to
So
interrupt,
again,
because
we
I
have
think
the
we got
two.
the PowerPoint.
Go ahead.
I think we got the PowerPoint up and on, if you can confirm that or see it, and I can carry
I
on.
do see it. Yes.
Okay.
Yes. Thank you so much. So if you want to go, I'm at a couple more slides. If you want to go up there, Kurt. Okay. Yep. So we have 2 loans, the FHA 203K, as I said, and the conventional program. They can be used on either a purchase or a refinance. And one thing that does need to be brought up in this market today, which I don't think I would have been talking like this 3 months ago, is that sellers, it's a seller's market. They want to close in 25 days. You know, there's no contingencies right now. There's, you know, you're going to pay any appraisal differential. So we may have to close some purchases with normal financing, you know, where you're like, just close it, get it, and then refinance into renovation. I'm working on 4 of those right now, where the sellers wouldn't give the proper time that was needed to close the renovation loan. So we are closing it with a normal loan and going into a refinance of a renovation loan. So that's important to know that that is available too. But if you do have a seller that will give you the proper time, these typically take about 60 days to close. We can close as quickly as 45 days if there's only cosmetic and no architectural plans needed. So again, they're used for purchase or refinance. And I would say 90% of our projects use what's called a licensed HUD consultant. They're on all FHA 203K loans where there's any structural or landscaping and anything basically over $35,000. They also are used on our conventional program for any work over $50,000. They come out and give a bid right away up front. So immediately when people go into contract, that's the first person that they would want to get in to get this cost of repair, to try to see if that's going to meet the budget of the buyer. Unfortunately, with HGTV and all those fancy things on TV, you know, they say, oh, you can redo a house for 50 grand in 30 days. That's not often reality. So the HUD consultant comes in to really give you a reality check. Hey, here's what you're trying to do. Here's the price point. Materials have exponentially increased right now as well. So people sometimes may, you know, think they can do a project for 30 grand and it really might be 45,000. So they just give a good idea of what's happening, which allows us to make sure that the buyer is going to be able to do it, you know, meets all the guidelines of the program, and that they want to move forward with the project. So the HUD consultant's great. They stay with the program the whole time during construction to get payouts done to the contractor, work with the bank for draws. So it's a great process. It keeps the clients, you know, with someone on their side basically to help them through the project. The work is started once the file is closed and permits are obtained, and then mortgage payments can be financed into the loan while the property cannot be occupied, only if the appraised value supports it. And why I want to say that is some people's takeaway is they heard mortgage payments can be financed and they automatically tell their clients, well, you can roll in 6 months, don't worry about it. Then we get, you know, into it and we explain to them, well, if the appraisal supports it. But right now we're seeing people waiving appraisal, like they'll cover the difference if, you know, their appraisal's short. So, you know, in that case, we wouldn't be able to roll payments in, you know, if the value doesn't support it. I would say about a 90% of, again, these do support it, and we are able to roll up to 6 months payments for like a full gut rehab. so you don't have any, financial distress during, construction. And then contractors are paid according to the guidelines. Kurt, if you can go back really quick, sorry.
Oops, sorry.
Contractors are paid according to the guidelines. So the FHA 203K limited, 50% of the funds are allowed up front. It's just a one-time. If it's a 30 grand project, they're given a check for 15,000. Then when they complete it, they get the other 15,000. The 203K standard also gives 50% of material funds, and those are more for the larger items. So windows, flooring, kitchen cabinets, roofing. So there is a lot of money given up front now on any program. Now the consultant writes it up in the first draw and then submits it, and we do need permits to pay out, the money for the materials. For the Fannie Mae Homestyle, they will give up to 50% of material cost with permits, and there is a cap. I think it's around $40,000. So it's not just an automatic 50%. There's going to be a cap where they'll say, here's your first draw, and then they'll move on from there. Once that material funds is released, then the contractor's paid as work is performed during the process, and there's 5 additional draws as they complete each stage of the project. So the borrower, if they are in the trades, if they're a general contractor, plumber, carpenter, roofer, electrician, etc., they can be their own GC on either program. So we have been seeing that more and more. It's totally allowed. We still will vet them and make sure, we have a little history on them, a letter, why they qualify. One note on our 203K program is that a family member is not allowed to be the general contractor. FHA has an identity of interest that does not allow, like if you're the buyer and your mom or dad want to be the general contractor because they are in the contracting business, they will not allow that. So that's a caveat we do have to remind people, because I do get a lot of 203K where people do want their family member. It's not allowed on that program, but on the conventional homestyle program, it is allowed. One other thing we often get is that tenants are currently trying to buy from their landlords. I'm seeing that more and more in this market, but on a 203K, it is not allowed, but it is allowed on our conventional program. So again, we vet each situation, make sure that the guidelines are met, and let everyone know what is going to be qualifying for the property. In the FHA world now, the buyer's agent can be a blood relative to the borrower and gift their commission to aid the borrower in purchasing the property. So they can, gift the down payment or gift closing costs. And that's different because in the past, the buyer's agent, if it was a family member, wasn't even allowed. So now not only do they allow it, they allow the commission to be used, which is, a great opportunity if you're helping a family member. So let's check out some loan limits here. Now this, we just determined today to just use our Chicago, Illinois area and Counter County areas for loan limits. But again, we cover all the states and they will vary. So loan limits are determined by where you're located. We have a ton of agents on the call here today. If you're in California, single family home loan limits are exponentially higher. Same thing in Massachusetts, Hawaii, Alaska, New York, New Jersey. So these are just our area. We just selected one to show you the difference. In our area, you can see the FHA single family loan limit is lower than the conforming. So we are using the conforming product a little bit more. As price points continue to increase and there are bidding wars, we're seeing, that we're having to use the higher loan limits. So we will match that up with the county, wherever the agents are at with their buyers, to make sure which program will fit their needs based on the county loan limit and the property type. So you can do any buyer. This is not first-time buyer. This is not like you have to qualify at an income level. Basically, any property, any condition, any borrower is eligible to apply for a renovation loan. We can do minor repairs or major repairs, properties that need updating. You can add garages, you can add on to properties, you can go up, you can dig down. I mean, basically anything that adds value is allowed. The thing is, it's not a wide open checkbook. It has to be within the loan limit of the, of the county. So there would be times where, if the purchase price is too high and the work is too high, it may not meet the loan limit. So we'd let them know that it doesn't qualify for the loan limit of the county. But as long as the down payment and purchase price meet the loan limits of the county, we're fine to move forward. So we give the cost to purchase the home, the repairs, then any remodeling they need, along with what's called soft costs. And this gets like missed sometimes because soft costs exist. What that means is, you're going to need permits. You're going to need what we call a contingency reserve for cost overrun. We also have to clear your title and keep the lien waivers signed and make sure your title stays clear. Architect fees, there might be structural fees. So everything is going to be included at one low down payment for the borrower. So it's a great opportunity to use our money, to update the home. And as Corey said, hopefully give yourself an inherited value, to start. The buyers can close as is. So I get that question a lot. Okay, well, the property's not habitable. Well, that's normal for us. Most of these are either outdated or have damage, and it's fine to close as is because our write-up will show that we're bringing the property to the condition that's required to fund, the loan. That's why it's called renovation. So we can close on any property with the single, loan. And even if a property has violations, which some, people have bumped into, we can take properties with violations because those will be repaired as well with our program. And the down payment, again, is determined based on purchase price plus all repairs. And on refinance, people have asked me, well, what down payment do I bring? Well, on a refinance, we just get to use the equity of the property as your, position. You don't need a down payment. The equity is basically the value that we have to use. So we're doing a lot of refinances where borrowers are bringing no money to closing and then getting $150,000 to do an addition. So again, we do both programs, the refinance or the purchase. And I do have a note here, renovation rates vary and they are slightly higher than a move-in ready home. And that is just inherently to the program. It's very difficult to do. There's a lot more risk involved in construction. So, you're looking maybe 3/8 higher on rate, and we would, provide that to the borrowers of all the realtors on the phone. We give them worksheets that show, the mortgage payment, the closing costs, how it works. So that would all be provided. So the repairs and improvements are done after the loan closes. So you guys as agents, you get paid at the closing, your normal commission based off the purchase price. People said, well, I don't do these because I've heard they're so difficult and I got to go out to the property 15 times. It's not really true. You do have to do one inspection with the HUD person. And if you're doing a gut rehab, it's up to the clients if they want a home inspection, but at a gut rehab level, it's not required, but the HUD consultant is required. So if you want to do both at the same time, it's fine. Or if the client wants to just do the HUD inspection, it's fine. Then the only other time you're going to get out to the house is typically there will be one more appointment once they get the HUD consultant report where they go bring in a couple contractors to look at the property and then give a bid. So it's like one extra visit. Again, I think the bigger challenges are just the closing time is 45 to 60 days versus a 30-day for a move-in ready. And then work is started once permits are obtained, and then we put all the renovation money into a construction escrow account to be able to pay out the contractor. Typically, we help try to find the mortgage consultant. They meet up with the client to do this cost analysis. They remain involved in the process from start to end, helping the client understand everything, making sure the contractor gets paid. And then a lot of the properties we do, like occupancy types, primary residence that are 1 to 4 units. We can do second homes that are 1 unit. We can do investment property for long-term hold that are 1 unit. We do, PUDs or condos, mixed use properties. So we have a lot of options for different properties. So obviously, if you can partner with, a lender that knows what they're doing, we're going to get these closed. A lot of lenders stopped actually even lending out on these programs when COVID hit. So there's very few that are, up and running and actually even doing these. So one thing I've heard from a lot of the realtor partners is, well, if the program's suspended, how are you doing? Well, it's not actually suspended. It was individual banks who decided to suspend it. Guaranteed Rate has never stopped lending on their renovation program. It has been constant. Even when COVID hit, we were able to remain with this amazing program and help out our clients. So for all projects over $35,000 on the FHA 203K, a consultant is required on the program. They meet, for the site visit, and they're going to identify on a 203K, there are what is called HUD Minimum Standards. So those are going to be mandatory repairs that have to meet health and safety guidelines. And then they'll address all the buyer's desired repairs, like, hey, I want a new kitchen, I want a new bathroom. Then they deliver the report and you talk about it and make sure that's within the budget and you move on. So once we have that, if you want to go to the next slide, Kurt, we close the loan, send out a welcome letter, and then we start to get, payment out to the GCs and move forward. So, it's a pretty simple, process at that point. And we have some great technology that our operations management brought in. The consultant works with the draw department, and these contractors are getting paid EFT payments now within, 5 days of the request of the draw being signed off on. They're not chasing a check around. It's really important to get them paid. And they do a great job here at Guaranteed Rate because we are directly involved from start to finish. There's no like outsourcing payments, which can take time. So it's a great process. And that's what's different too about Guaranteed Rate. We control the process from start to finish. We fund our own loans. It's not brokered where you're waiting on other banks or other underwriters or wires or money. It's very streamlined here, which I think has been a great advantage, for all the agents who want to engage in this, product. Then this consultant, I do get asked, well, do they cost money? Yes, everything costs, right? He comes out, this is a fee schedule that is available. This is kind of a standard schedule. It can vary in certain high cost areas. They may have higher charges, but this is like a standard schedule. Based on the amount of work you're doing, that's going to be tied to the fee that will be paid, okay? And you can go to the next slide. I just wanted to give people a general idea. That fee is reimbursed at closing. If the client moves forward, we will give them a credit back at closing. If they don't move forward, it's no different than a home inspection. If they decide to cancel the loan, they paid for the service because that was what was needed to determine if they're going to go forward. So I do want to mention that. So for agents, and listing agents here, try to market this or leverage this to gain more, buyers and sellers. Like if you have a buyer and they keep looking at homes, and that's really how I, got a lot of my agents. They're like, I've shown 35 homes, they're never happy. I'm like, well, have you mentioned this program? They can update things, they can open, make floor plans open, buy in a certain school district. And once you have that knowledge, maybe it'll help you, create some symmetry with your buyers to say, hey, this program, you like this area, let's use this program and leverage it to do what you want with this floor plan. So, maybe that'll help you with some buyers who are not really liking anything. They like 80% of the house, but not 20%. Well, let's use this program to make them like the whole house. And again, you can do minor work or major work. It doesn't matter as long as it fits within the guideline. On the listing side, like we help agents who are REO agents who are like, okay, I got a lot of distressed homes. I'd like to get more than just cash offers, to bring to the asset manager, higher price points. If you have distressed properties, think about in the MLS, bring your interior designer, bring your ideas. This, qualifies for renovation lending. Market your open houses with flyers with before and after photos, or even, information on the program. And we do have some things available in Red Arrow Connect for that, Kurt, as you know. So here's like an agent who did a property in Michigan, just said, bring your contractor, an architect, and make this home yours. They had not done that. They attended our webinar. Then they switched into this mindset, and she had the property under contract within 2 weeks. It's all about, educating the buyer as they walk in that this money is available for them. And boom, she was able to move it off the market. And again, there are marketing materials in Red Arrow Connect, like this example here, just very simple, low down payment, fixed rate, one-time close. We can roll in mortgage payments, credit score, things like that. It's just nice, simple, clean things for you to be able to put at your properties if you're listing. So takeaways from this, you guys, as agents, on the call, try to get, close more transactions. We can do any property in as-is condition. Renovations can be completed as long as the existing foundation remains. We can also add on, so we can add additional foundation. We just need the existing to remain in place. We can use future value. That's what people are confused too. They're like, well, how are we buying the home and putting an addition? Well, I'm using the future value based on everything, not just the purchase price. We can do REOs, foreclosures, estate sales, outdated properties, customize the home for clients. And again, as agents, you're paid when the home closes, not down the line when renovation happens. It's a normal transaction for you. So our dates are varied upon what the project style is. I mean, the quickest I've ever closed a rental loan was 30 days, but the client had everything lined up, and it, you know, we just worked out and moved very quickly. But standard time, again, is 45 to 60 days. So if we want to open it up to questions, Kurt, I did want to leave some time. We have about 17 minutes left to.
Absolutely. We'll start with the Q&A. I know you showed that one marketing asset in there, and to the agents on the call, there are a couple other additional renovation assets that are part of Agent Advantage. There's lots of collateral and assets in there. You can grab those there. That's something you can do. Can be co-branded with you and your loan officer of choice. We got tons of questions. I want to start with the kind of a general one for both Chris and Corey. We covered a lot of the benefits, so I want to know what, in your opinion, are the biggest challenges or the things to look out for if one is newer to renovation. Maybe Chris, then Corey, and then we can have Danielle and Brooke go into the question queue.
Yeah, I definitely want to address that. I think the biggest challenge right now that we're facing is not at the guaranteed rate level, because we are like a fine-tuned machine. I think it more comes with the contractors. That's where I find the biggest pain point for the clients, is that the contractors have to fill out what's called a contractor sign-up package to validate that they're, you know, legitimately qualified to do the project. So if you're doing because we have an addition going on right now that was $250,000, the contractor's largest project was only $50,000. Well, they won't approve that because we don't know that he's going to have the capital to manage such a large project. So that's one issue, is just making sure if you're going to do this project, you know, or a project, that you have a contractor that does projects similar in size and in nature. And just getting a contractor has been a challenge. I don't know if you know, Kurt, permits are at an all-time high for applications since COVID hit. It's crazy. You know, people are at home more now and everyone's doing work to their house. So even getting a general contractor has been quite challenging for, you know, borrowers. So if they are considering doing a fixer-upper, getting ahead of that is super important. You know, trying to vet a contractor. That's what I'm seeing as some of the, you know, issues that we're bumping into, you know, on these. And again, I'm on track to do 60 or 70 million in rental this year. So I'm doing about 150 of these. That's the biggest concern we're seeing is general contractor side. Corey, what are you seeing out there?
And I tend, since it's my clients tend to mainly use my contractor. I have a couple contractors who are signed up already, which makes it a lot more convenient. So once you have a contractor that you know has gone through and been vetted by Guaranteed Rate, it's great to start referring them to other clients who are interested in the same product. But for me, I guess biggest challenges are getting that bid together, making sure you've got enough time in your contract. When you write an offer, sometimes these do take more than 30 days unless you've got a client who is super detailed and on top of the paperwork. There is more paperwork for your client, but again, it really isn't a big deal. It's just getting it all in and going through the loan. Like we were just in option period for my client, and I made sure that we got out the GC, the HUD inspector, a plumber, a roofer, a foundation person, all like within one day. I try to just time block it, like we're gonna go be at this house for 4 hours, get all of these people out there, because you want to get as many numbers as you can as possible. To get the best bid that you can. I highly encourage my clients to put every single thing that they can think of that they'll want in their bid, from door hardware to cabinet hardware to blinds for the windows, because you can put all of that in your bid, and then it makes it so they really don't have to deal with as much later out of pocket for these kind of things to come up, which is really helpful. But I have had clients who, you know, after closing, they find issues with the house that they didn't discover during the early part. And it's great that the Guaranteed Rate has you take out like a contingency reserve fund in case things come up. But the more thorough you can be with your clients in the beginning, it really helps them get the best bid for a full remodel.
Great, well said, Corey. So let's get to see how many rapid fire questions we can get. If Danielle can start reading some of the questions that came in from our attendees.
Yes, absolutely. We've got lots of good questions. The first one being, if you use this program for yourself on an investment property, are you able to do the work yourself?
Only if you're a licensed GC or in the trades. And when you say investment property, we only do long-term hold. So it's not for like flips. We can't do flips. So if it's a long-term property you're going to keep and it's only for one unit, like if you're going to buy a single family home and just update it to get the strongest rents you can, and you're going to keep it long-term, that's allowed on the program. And if you are a GC or in the trades, then you can request to be your own GC, and we have to vet it. And if we approve it, then we're fine.
Okay, great. Another question we have here is about gift of equity and if it's allowed on Renault programs.
Yes, it is. I actually do a lot of those. You know, they're a little difficult to structure, so it takes me some time. But yes, gift of equity is allowed from a family member on the program, definitely.
Okay, great. And how about any issues for properties held in trust?
No problem at all. We can do properties in trust. We can do foreclosures, short sales as well.
Okay, next question here is, to get the renovation estimate, does the buyer have to do the home inspection first?
The consultant we typically bring out immediately because that is the bid you get. Because I would say, you know, for everyone on the call, 30–40% of these may not go through once we get the consultant write-up, you know, or we may have to scale back what the client wants, just because, you know, construction inherently costs a little bit more than what people, you know, are eyeballing. You know, these clients are usually novices and are like, okay, I want to do the house. I think it's 100,000. You know, they don't know. So then when you get the real bid and we try to put the numbers together, sometimes they don't all work, or a property is in much worse condition than meets the eye, which is why the consultant comes out. Like we've had, you know, a home, and this is what's great about the consultant, everybody. You know, we just recently had a home that looked good, and then the consultant got there and there was extensive termite damage. But to, you know, a normal buyer, no one's going to really recognize termite damage. It's not usually very visible, but once they started to see these trails, lo and behold, it was a major problem. And luckily the buyers didn't, you know, buy that property. So you will get that HUD consultant out immediately to try to get that bid to see if you want to move forward.
Here's one. What type of properties aren't allowed for either one of you?
Co-ops are not allowed. Non-warrantable condos are not allowed. I think some manufacturer mobile homes aren't allowed, but that's about it. I mean, you know, mostly any type of property. We don't do, you know, large commercial or anything like that. It's more residential. You know, like we do mixed use, but not commercial, if that makes sense. Mixed use is like if there's a storefront with, you know, a residential above it. That's what, when we had addressed what's eligible, that's a mixed use property.
Got it.
Okay.
Others, Danielle?
Yeah, another question here. In the event of a housing or economic downturn, do you foresee these programs continuing to be available?
These programs have always been available, even in the housing crisis in 2008 to 2011. We've never stopped lending, you know, because there's always appraised values. If there's a housing downturn, you know, they're going to do the valuation of the property and only loan out what they feel is appropriate in the neighborhood.
Okay, and another question here for, is Renault available for VA loans?
Not at this time. It is suspended. We would let everybody know once it is opened back up. And the VA loan, rental loan, when it is or was available, you know, pre-COVID, there are a lot of restrictions on it. It doesn't have these major. It's more for cosmetic. between 35 and 50,000. But it was available until COVID hit. It has not been reopened by VA. So once it is, we'd let everybody know.
Where do we get a copy of approved vendors in each state?
Approved what?
Vendors,
What does vendors mean?
contractors.
Contractors?
I'm assuming this question means,
No,
yeah.
there is no approved. Like guaranteed rate cannot refer a contractor. You can bring in your own contractor. You could, like Corey said, she identified a couple, so that helps her buyers. So as agents, you can also vet GCs for your clients or help them find one. They'd have to vet their GCs themselves. There's not an approved list.
Anything to add
Each
on,
contractor
Corey?
fills out but each contractor fills out that individual package, as mentioned previously in the presentation. And once they're approved, then they could do additional, but there's an individual package for each contractor. Every bank has their own package.
Any other, here's one. What's considered a long-term hold?
Typically, from the time the construction is complete, it's 1 year.
Got it.
And most of the investors who are doing that hold for 2 years, Kurt, because of tax purposes, just mentioning that.
Any others, Danielle, from earlier?
Another question, yep, about loans being available for investors as well.
Yes, we only offer, again, long-term holds for over a year on 1 unit only. We don't do multi-unit renovation investor. We don't have that at all. And I also wanted to mention, Corey had mentioned about seller credits and a 2%. That's not actually accurate. For FHA, you can go up to 6% for seller credit, which is very important because that's a very good seller credit that's allowed to cover everything, closing costs and prepaids. So we're able to do FHA with literally the client bringing 3.5% and getting all closing costs and prepaids paid for, meaning home insurance, real estate taxes, and all closing costs. On the conforming program with 5% down, they cap that at 3%. So again, there's some really good seller credits available, and you can be gifted the down payment. So knowing the guidelines are very important. And also FHA, there's a lot of like different tests you have to do and like minimum investment requirements. So really knowing, that you have a solid pre-approval is super important, for the agents to feel comfortable with the program. Just mentioning a couple of those things.
Yeah, a lot of questions asking what the current rates are, but that would
So yeah, today on an FHA deal I was looking at, very good credit, and it also is based on loan amount. We were at like 3.125 with a slight discount fee, like very slight, like 20 basis points. So it was like a $300,000 loan. So for $600, they got 3.125. Our conventional program, single family, between 3.375 to 3.5 was, today. And again, a lot of factors come into it. So if someone has not good credit, that's not going to be the rate. So it all depends on loan to value and credit score, debt to income profile. But those are average rates today.
Others, I see we have some really specific ones. Any other?
One about requirements, if there are requirements to become certified to represent this product.
No, as an agent, anybody can do this. That, like, every agent out on this call just know about the program. No property is ineligible. Like, people are like, like, this is an eligible property. Every property is eligible for renovation that's residential. So any agent can do this, this loan. They would just need to work with a renovation specialist to get the lending in order. But yeah, every agent on this call, I hope you do utilize it. Hopefully this education will help you.
Yeah, anything else, Corey, that you did on your side as far as education at the very beginning, or do you just dive in?
And for me, it was kind of a learn as you go. Even this last summer, I used the homestyle loan as I bought a house as a second home for my mom to live in. So that I was able to do a 5% down on that one. And I had always used FHA 203K in the past, so it was my first time home style. So I definitely am a learn by doing. I definitely recommend everybody to use this product. It really can change your life completely and your clients' lives. But if you can't do it yourself, then I would definitely talk to a renovation specialist and learn the programs and use, like on the PowerPoint slide, there was that one page that showed the differences between the loans. And they have changed even since I first started doing them, like the money towards being able to front money for materials. That wasn't a thing in 2012. So I'm constantly learning, and it's good to constantly kind of be updated on this because these products are really wonderful.
Great. Maybe one more question, Danielle? We're pushing against time.
Yes, last one. Are the renovations done before closing?
No. That basically, when you close, that's the first time you can go get permits. You have to be the homeowner to get the permits. So no, the renovations are not done. Once you close, that's when the process would start. So no renovations are done prior to closing.
Closing words of wisdom from both Chris and Corey before we let you go. And again, you guys are both great.
I just say I hope that these agents can take away the value of it. Again, just knowing this product, not that you have to know all the details of it, like who qualifies, but more so just using it for your buyers and your sellers, that you have this in your, portfolio to bring to them, like, hey, this is a great product. This can help us get you a home. You just be more, anything to give you an agent advantage to get more listings or more buyers and help build your, opportunity with buyers. And again, once you do one or two of these, I had an agent who did 2 successfully. She got like 10 referrals from her clients. They were so happy. I'm assuming Corey sees that. It's like, it can really change your life. You're talked about. You're the one who found them the home, maybe at below market or just a great opportunity to update a home. Then you're talked about as the agent, and all of a sudden you're getting more referrals. Our Agent Advantage program here is to help the agents, build more business, build up your client base. So hopefully this will add value to what they're doing, with Guaranteed Rate as their lending partner.
Yeah, I would say that's totally true. Because people who not everybody wants to remodel a house. That's for sure. A lot of clients want a move-in ready house, but not everybody has that option, especially in this current market. So when they can buy a house, but then make it their own, and everybody thinks that's really cool and they love it. And I think everybody kind of sees themselves as like their own HGTV reps when they go see any house. They're like, oh, I wouldn't do that, or I want open shelving here, or I want this here, or I want this different flooring. And so giving them that opportunity to be able to do that on a house that they buy, and then have their friends see that they got to do that, and then knowing that these are just normal people and not investors with a lot of cash, makes a huge impression. I do want to say, though, that you should let your clients know that remodeling a house, while it's really fun, it is a lot of work, but the payoff is huge. So it's definitely worth it, but always bring that in too, because if you come in with a more realistic side, it helps your clients get through the actual remodel part.
Yes.
Oh, and hey, Kurt, I wanted to add, Guaranteed
Sure.
Rate is very happy to provide, detailed renovation training for the agents or their, agent offices, as we do often. One of the big things here is that we train, we do these webinars or, teach offices if any brokers are on the call that manage an office that want to bring it into their office, we'd be happy to do, the individual trainings that we've always done, and you can reach out to us to schedule a training.
Great, good ad. Awesome, lots of great stuff. Wanted to give a quick mention. We just rolled out the Facebook page for the Agent Advantage website, Agent Advantage Insider. I think Danielle put a link in the chat where you can just go to join. It's a closed private group, just like the website. It's created just for the purpose of helping agents, just like this webinar, news, content, webinars, insights. Next webinar, next month, we have the topic of how to set up your own Google My Business page. If you don't already have a Google My Business page, we have Nick Ermo. And as far as SEO and social, I'll just say that is what Nick knows. So if you don't have your own Google My Business, stand out from the competition, increase your engagement. It could be free, but how to show up and show up higher in your searches. Any questions? If you have questions for Chris, if you have questions for Corey, if you have questions for us, please email agents@rate.com and we will be sure to get answers to you. Thanks for hanging with us. Thanks for joining this Agent Advantage live webinar. Hope to see you on another one in the near future, and have a great day, everyone. Thanks again to Chris and Corey. Really appreciate your time and your insight.